Robert Kiyosaki's face lights up as he discusses his concerns about the bond market's impact on the US economy in a recent Fox Business interview. His smile amid challenging financial times reflects his unique perspective. Kiyosaki's confidence stems from his ability to identify hidden opportunities for growth and wealth creation, which he believes exist despite the current market conditions. Watch this video and pay close attention. Then I will explain why he's smiling and what we can learn from his experiences and how we can make money in the midst of this turmoil. Now, the thing that I see is that the Fed and the FDIC are signaling hyperinflation, which makes gold and silver even better because this thing here is trash. They're just gonna keep on churning out that phony money. And that's the message from both the Fed and FDIC. They're basically saying, let's print as much as we can to slow down this crash. The funny part is, they're the ones causing it in the first place. Kiyosaki's got a knack for calling the shots on economic stuff, remembering how nobody believed him when he called Lehman Brothers collapse. That's why Fox take him seriously. Worried about Goldman Sachs and Lehman Brothers? Yep, I'm concerned the Federal Reserve might end up having to step in to save the day. I'm concerned about that too. The investment bank declared bankruptcy this morning, a shocking twist after a weekend of intense negotiations that couldn't prevent its downfall. It's another instance of major banks going under in the United States. Just a month ago, Kiyosaki was already sounding the alarm about the looming financial market crash. He predicted that another bank would follow the collapse of Silicon Valley Bank and the voluntary liquidation of Silvergate Bank, emphasizing that precious metals would benefit from the situation. Kiyosaki's smile in the interview might have been a nod to his track record of making such predictions, even when investors initially doubted him. This video will delve into Kiyosaki's most recent forecast, cautions, and advice for investors. In recent weeks, the global banking sector has been rattled by a series of bank collapses in both Europe and the United States. According to Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, Credit Suisse, Switzerland's second largest bank, may be the next to face a collapse, following the recent troubles in the US banking sector. Credit Suisse, a major player in both Europe and the global banking landscape, also functions as an investment bank. Kiyosaki's tweet on March 10, 2023, hinted at the situation's potential impact on precious metals. He advised followers to invest in real gold and silver coins rather than ETFs, anticipating that the prices of these metals would surge once the third bank experiences a crisis. Kiyosaki, who accurately predicted Lehman Brothers' collapse in 2008, has voiced concern about the bond market's potential to destabilize the US economy, leading to a weakened American dollar. He emphasized the bond market's enormity compared to the stock market and characterized the Federal Reserve as both the firefighter and the cause of the problem during his Fox Business interview. Kiyosaki also expressed apprehension about Credit Suisse, the world's eighth largest investment bank, attributing this concern to a perfect storm resulting from the bond market crash and the impending retirement of his generation. Earlier, he had warned that the US pension crisis could become the next global Lehman event. Consequently, Kiyosaki recommended that investors safeguard against high inflation and the Federal Reserve's extensive money printing by investing in gold, silver, and Bitcoin. To gain more insights, let's briefly review Robert Kiyosaki's interview on Fox Business. On March 13, 2023, Robert Kiyosaki tweeted a prescient message stating, "Bailouts begin. More fake money to invade the sick economy. Still recommend the same response. Buy more gold, silver, and Bitcoin. Take care. Crash landing ahead." Remarkably, this prediction came just hours before Credit Suisse confessed to a substantial weakness in its reporting procedures for the 2021 and 2022 fiscal years. The bank's auditors raised concerns about internal controls and risk management. 2 days later, on March 15th, Credit Suisse stock plunged by as much as 31%. The chairman of its largest shareholder, Saudi National Bank, ruled out further investment, prompting Credit Suisse to seek public support from the Swiss central bank. The bank's bond insurance costs surged to levels not seen since the 2008 financial crisis. In a bid to avert an economy's catastrophe, the central bank offered significant financial assistance. Over the ensuing weekend, Swiss authorities orchestrated a merger between Credit Suisse and its local rival, UBS, for approximately $3.25 billion, a value significantly below its previous market evaluation. Credit Suisse had faced numerous setbacks, including criminal convictions for money laundering, involvement in corruption cases, espionage scandals, and data breaches. The bank's high-risk client associations, such as Lex Grinsell and Arcigas Capital Management, led to substantial losses, further ending confidence in its management. Client outflows, particularly in Asian wealth management, added to its troubles, resulting in a staggering net loss of $7.3 billion in 2022. Kiyosaki's concern about the global recession, which he views as worse than the Great Depression, resonate in the current economic climate. He warns of potential bankruptcy, unemployment, and homelessness, all of which could significantly impact people's retirement savings. On January 28, 2023, Robert Kiyosaki took to Twitter stating, "What's worse than the Great Depression? Answer, a global recession." Unfortunately, we are in a global recession. Hang on, rough landing for the world. Bad news, bankruptcy, unemployment, homelessness, sore retirements, toast. Good news, bargains everywhere. Gold, silver, and Bitcoin, priceless. Despite the gloomy outlook, Kiyosaki believes there are opportunities to be seized during a recession. He advises investors to take advantage of discounted assets, including gold, silver, and Bitcoin, which can serve as hedges against inflation and economic uncertainty. Kiyosaki's concerns extend to the massive government debt levels worldwide, warning that excessive debt can lead to defaults, triggering a global financial crisis. On March 11, 2023, he tweeted about the world economy being on the verge of collapse and urged people to invest in silver, anticipating potential bank runs and frozen saving accounts. Another of Kiyosaki's worries is the fragility of the banking system due to over-leveraging, making banks susceptible to runs by depositors. This could result in extended periods during which people can't access their savings. He also raises the alarm about bail-ins, where banks use depositors' funds to stay afloat during crisis, potentially resulting in losses for customers. Kiyosaki has been vocal about his lack of trust in the Biden administration and the Federal Reserve's action, which he believes could harm the U.S. economy and the dollar. He advises against traditional investments like stocks, bonds, mutual funds, and ETFs, advocating for alternative assets like Bitcoin, gold, and silver as safeguards during turbulent times. In mid-February 2023, he predicted that by 2025, Bitcoin would reach $500,000, gold $5,000, and silver $500, attributing this to the loss of faith in the US dollar due to the Federal Reserve's monetary policies. He even shared his intention to use fake dollars to purchase more gold, silver, and Bitcoin, emphasizing their value as real money compared to fiat currency. Kiyosaki has been a proponent of precious metals, particularly gold and silver, as he considers them reliable hedges against inflation and economic uncertainty, dating back to his gold investment in 1972, driven by his skepticism towards the Federal Reserve. For Kiyosaki, acquiring gold isn't merely a preference for the metal. It's a strategic move to safeguard his wealth from the potential adverse consequences of government monetary decisions. Join our community and gain access to the most current and relevant updates on the stock market and the economy. We consistently provide insightful commentary and distribute important alerts related to the economy and stock market on a weekly basis. Your participation is highly valued, so don't hesitate to become part of our community today.